So the shares of Tesla have done really great lately, and the stock serves as a great example for how to read a stock chart. And so this week, I'm going to teach you how to read any stock chart. And then we will apply those skills to analyze the overall market. We're going to look at the day trade of the week on WIMI and do a market scan in search of opportunity. All right, so how do we analyze a stock's chart? Well, I'm going to use Tesla as an example. And this week, what we're going to do is go through the 7 things that you need to understand in order to read the chart of any stock, but really any commodity, Bitcoin, whatever you like to trade. You can take these 7 skills and apply them to anything. So what are the 7 things? The first thing we need to understand are inflection points. And then we're going to talk about support and resistance, optimism and pessimism, and then price volatility and abnormal activity. And once you understand those things, you can look at any chart and predict where the price is likely to go. Plus, you can pick good entry points as well as exit points. So let's jump into the chart of Tesla and we will see how to apply those things. All right, so here we have the chart of TSLA and you can see that it's done really well lately. It was $300 at the end of 2019, just a little over 300. We're now over 1,500, so it's been a great mover. So the first thing we need to talk about are inflection points. Very simple. Look for peaks and valleys on the chart. Okay, so anywhere price stopped going up and started going down, you've got a peak. Anywhere price stopped going down and started going up, you have a valley. We're going to call those inflection points. Now then, when we talk about support and resistance, we're going to use inflection points to define those. So we can draw a horizontal line of support at an inflection point. So any inflection point can be a horizontal line of support, or we can connect across inflection points to draw a trend line of support. And we can do the opposite for resistance, which is a ceiling price. We find the inflection point tops and we can define horizontal lines, which are inflection point tops, or we can draw a line across them to define a downward trend line of resistance. All right, next up is price volatility. That is, how much is price changing over time? You can see over here, there's not a lot of price movement, whereas in here, we've got quite a lot. And what you want to look for are situations where price volatility is compressing. That's very simple. Take your inflection points, and if the lines that you draw across them are converging, then you have compressing price volatility. And there's a few examples of that on the Tesla chart where price volatility was low because it had compressed. Now, the final thing we want to look for is abnormal activity. If there is a stock that trades abnormal volume compared to what it had traded before and has an abnormal price move compared to what it has traded before, then you have abnormal trading activity. So we've got that right here. You can see the volume was higher and the price move was more abnormal than normal. It's kind of hard to tell because the scale got skewed. So let's look at some more recent examples. Here was an abnormal price day. You can see the volume was strong. And then over here, we had some abnormal price moves in the last little while, although volume hasn't been significantly higher. Now we can combine all of those things to find good entry points. What we want is situations where price is breaking through resistance, from optimism, and from compressing price volatility. So we have optimism because we have rising bottoms. We have compressing price volatility. We have an abnormal break from optimism through resistance, from compressing price volatility. That was an excellent buy point. We had the same thing back here, compressing price volatility with optimism, abnormal activity breaking through resistance. You can see the stock went for a big move, and you can see here the stock has gone for a big move. Now, what is next for Tesla? Well, one of the most important rules in chart analysis is to always remember that when price runs away from the trend line, just erase all these lines and redefine this here. When price runs away from the trend line, so we draw a trend line across the inflection point lows, and when price runs up and away from it, it is very likely that it will pull back soon. You can see that back here. There was the trend line. Price ran away, it pulled back. It ran away, it pulled back. And what you want to watch for is when it runs away from the trend line to get very aggressive with your exit. So I would be looking for an aggressive exit signal on Tesla because it is really running up euphorically. It's very risky right now. Very risky for a pullback to the trend line. And if ultimately it then breaks from a falling top through the trend line, then it's likely to go lower. So there you have it, a quick lesson on how to read chart patterns. Of course, we can get much more in depth on this, and that's something I do in the different courses I teach at stockscores.com. But this is a great start, and hopefully it will help you with your own trading. All right, let's get into this week's market analysis. And starting us off with the US markets, this is a chart of the S&P 500, 30-day, 60-minute. Let's just keep those skills going. We've got rising bottoms. We have resistance here, and we're just touching that resistance. Generally speaking, over the last month, we are trading sideways. So I would say it's a neutral market with a slight optimistic bias because we do have rising bottoms, but we are stuck at resistance. And so we need to break through this. And if so, then we're going to head up toward the next level of resistance, up around 323.5 on the SPY. So that's a neutral chart. If we take a look at the longer term chart of the SPY, this is the 3-year weekly chart, you can see we had the big COVID correction when the upward trend line was broken. We then had the bounce back when the downward trend line was broken. We've had a nice rally since then, but we have been stuck in this little sideways range. So this also is a neutral chart. Moving along to the Russell 2000, which is our US small caps. And again, let's start with inflection points. We've got rising bottoms, but we also have falling tops. Draw lines across those. We have what's called a pennant pattern. Pennant pattern is compressing volatility, so investors are getting more confident about what these small cap stocks are worth. But until we break out of the pennant, we don't really have a reason to sort of predict where price will go. If we get an upside breakout from the pennant, that would be bullish and indicate that those small caps want to go higher. If we get a downside break, it would indicate that they are going to go lower. Right now, I would give this a neutral rating for the small cap stocks in the US. Moving along to the Canadian markets, pretty similar to the S&P 500, generally speaking, going sideways. Draw a line across the tops, draw a line across the bottoms. You see that we have compressing volatility. The waves are getting less and less, and that means investors are building confidence. And ultimately, what we need now is a break out of the pennant. If we get a nice strong break to the upside, that would be bullish. If we get a break to the downside, that would be bearish. Right now, it is neutral. Long-term chart, again, very similar to the S&P 500. We essentially have resistance here, support here. We need to see a break out of that range one way or the other to predict where the market will go. I would give this a neutral rating right now. On to the TSX Venture, you can see we are really running higher on this market. If we define our trend line, something like that, again, touching off of those inflection points. And right now we are way above the trend line. That means this market is risky. A lot of gold mining stocks, precious metals stocks, which are doing well as gold and the precious metals have moved higher. And that's really what's driving this market. No reason to be a seller, but certainly a reason to be cautious because it's getting a little emotional to the upside. On to commodities. Let's take a look at gold. And you can see that gold is in an upward trend. We broke out of the ascending triangle pattern a couple of weeks ago. That was our latest buy signal. We had another break from a compressing chart pattern back here and a nice little rally out of that. And now we had another one. Like I said, 3 weeks ago, we talked about that here on the Stockscores channel. I think this is still looks good. It is a bullish chart, but again, I want you to be a little bit cautious because prices are well into their upward trend. So don't chase things higher. Look for fresh breaks from good chart patterns. On to oil, and we have rising bottoms on the daily for oil. That's positive, but we also have some resistance that oil seems to be getting stuck under. And until it can break out from that with some enthusiasm, I'm not going to be too excited about oil. I do like that it broke the downward trend line. I do like that rising bottoms have started to build. Pretty good buy signal back here when we broke from a rising bottom after breaking the downward trend line. But we still need to now break out for the next wave higher. I don't see that yet. So I would be somewhat cautious with oil. And finally, the fear chart, which we use the VXX as an indication of investor fear. And you can see that fear is falling, but it is still elevated from where it was. And so there's still lots of concern in the market, but it's relatively stable emotionally. So my ratings then, to summarize: neutral on both US and Canadian stocks on both timeframes, long and short term. Gold bullish on both timeframes, and oil neutral on both timeframes. Stocks continue to hold on to their gains. There always seems to be some buyers ready to take advantage of price pullbacks. Every time I see a little weakness in the market, the buyers are stepping in. Now, gold stocks are starting to show some emotional buying, which I think makes them risky, but no reason to sell them. I would just say dance close to the exit door on those. Oil stocks are not keeping up with oil stability. Many may be facing financial challenges. So on the individual oil stocks, you really have to be careful because some of them are in financial trouble simply because they can't support their debt. Fear is moderate in general with the market. There's no panic, so we can be fairly optimistic about stocks in general. All right, moving along, let's now take a look at the day trade of the week. And this was a real hot stock on Friday, and we picked up on it with the Stockscores Action Candle Indicator, as we always use in our active live service. We're monitoring every US stock for stocks making 2-minute action candles, that is 2-minute abnormal price moves with abnormal volume. And then we check the charts to see if they have some of those characteristics that we talked about at the top of the video this week. And you can see here on the chart of WIMI, the action candle right at the open, breaking from low volatility. Now just bear in mind, this is a 2-minute chart, so very short term, the kind of chart that day traders use. Now my comment to my subscribers on Friday morning was, let's watch this stock for a second signal. Because it made a big gap to the upside, I want to see a second break from a predictive pattern. So we had the action candle here, the stock pulled back, and then it built an ascending triangle pattern. See how the bottoms are rising? That's optimism. We had compressing volatility. That's good. And then we got a break from compressing volatility, from optimism, with very abnormal volume. And that was the strong indication that this stock wanted to go higher, and higher it did, rocketing parabolically into the close. Now, the economics of this trade are as follows. For $100 of risk, you would buy 170 shares. That required $1,394 of capital, but because the stock was starting the day at around $8, you could margin that stock 3-to-1. That means you get to borrow 2/3 of the capital necessary to buy it. Most brokers will give that leverage to you when you are day trading. That meant that the actual capital you needed on this trade was $465. And because the stock ended the day at a risk-reward multiple of 11.75, that means a multiple of this amount right here. You can see each one of these lines is a multiple of risk. That meant an $1,175 gain on capital required of $465, which is an awesome 252% return on a one-day hold. Don't get them that often like this, but WIMI was just an extremely abnormal, extremely liquid stock, made a great move on Friday. And the best news is we caught it early with the Stockscores Action Candle. All right, let's do the Stockscores Market Scan now. So I'm going to jump over to the Stockscores website. And what we do here is run a preset scan using the Market Scan tool on Stockscores. This is something available to investor and active trader members of the website. And it allows us to filter through all North American stocks in search of opportunities. So we'll just jump over to the Market Scan now. I'm logged in. I'm going to select this week the Abnormal Breaks Canada scan. There wasn't too many found on this, only 3. And we're going to just go through them and analyze each chart quickly. Because we only have 3, we can spend a little bit of time. So first one is V.NXO. And let's just take the skills that we learned at the top of the video. First of all, we've got rising bottoms. There's our rising inflection points. What does that mean? Optimism. We also have a line of resistance at these other inflection point highs right there. So we can draw a pattern. We can see that there is compressing volatility. And then we got a breakout with very abnormal volume on Friday. That sets up for a really nice buy signal. I would rate this a 7 out of 10 based on the daily chart. However, I also like to take a look at the 3-year chart to make sure there's no issues. And on the 3-year, I still think it's good. We've broken the 3-year downward trend line. We've built rising bottoms. We're breaking through that resistance. I think this stock has got about a 70% chance of moving higher in the near term, hence the 7 out of 10 rating. Now moving along, here is American Lithium, VLI, and don't really like this one because it is way up into the upward trend already. You can see that it broke from low volatility back here, and we've had a series of rising bottoms, and now the trend is going parabolic. Great stock to hold if you own it, but I would dance close to the exit door, as I like to say, because it is at risk of a breakdown. So watch for a sell signal. No sell signal yet, but keep an eye on that one. And the final chart we're going to look at is Richelieu Hardware, T.RCH. And let's start with our inflection point lows. We've got rising bottoms. We've got a line of resistance here. This is called a cup and handle pattern. Here's the cup. Here's the handle where you've got low volatility on the right, and we're breaking out. Weakness, no abnormal volume. That's not good. Stock scores are still in good shape. You can see the scores are very high. I think this is a good stock to hold, but I don't love it as a buy here because of the lack of abnormal volume. I would give this a 6 out of 10, which means I think it has a 60% chance of going higher. Well, that has been the Stockscores Market Minutes. Hope you've enjoyed it. If so, please click on the subscribe button, click on the like button. If you've already subscribed but you don't have your notifications turned on, click on that little bell as well, because the bell will mean that you will get email updates every time I upload a new video. Hope you've enjoyed it, and most importantly, next week, trade well.